As we take a look at the upcoming week, we should really reflect back on what was the last thing that happened on Friday. You may remember that was that Moody's downgraded the U.S. government credit rating. They knocked it down from AAA to AA plus or something. I'm never quite sure how all those letters and numbers come along, but it was a single amount, whatever the least amount they could downgrade it. But they said, "Hey, look, you guys are spending too much money. You're not getting in enough revenue, and or that's making a problem for the deficit, which is adding to the debt, which is creating massive amounts of interest payments, and the interest rates are staying up high." This looks to us like a very dangerous situation. Some people call it a potential debt spiral, where the more that interest rates go up and the less confidence that people have in the U.S. Debt, they stop buying even more bonds, which means the interest rates go up, which means that the total amount of government revenue, government expenditures go up, which means the deficit goes up. This is a very, very bad spiral. What we're looking for is the opposite spiral. And I think there's a lot of reason to believe, and we'll talk in a minute about why maybe the opposite will be true, where there will be more confidence in the U.S. debt as expenses go down and as interest rates then go down, et cetera. You get the point. We've made it many times on this channel. But let's start with Tesla news tonight. First of all, we got James Douma. Now, if you haven't watched it already, a little while ago, I did another longer story that had to do with the Robotaxi, coming up in June, and a big piece of that article or that video that I did just a little while ago. I'll put up a card on that later. A big piece of that was James Dauma's overall comments in detail about how he sees what's coming up in June. But just this little quote from him today on X. He says, "I get the sense that the public narrative gets fixated on the timing predictions." Randy would never do that. "I just don't think they matter much. So I tend to downplay deadlines. The most important thing is getting the job done and bringing it, meaning Robotaxi, to market. I try to focus on that aspect of things. I'm really confident that Tesla will be doing something in June. But I'm not sure that whatever they do in June will necessarily satisfy everybody who's focusing on it. Because some people think we'll get up to 500 cars in June or get up to 300 or 200 cars. So, I'm perfectly happy if we get up to 50 or maybe 100 cars in June, but maybe we won't even do that much. The reality," he says, "is that they need to start small with a lot of oversight and then ramp it up and loosen it as they get experience. Even if it doesn't go perfectly, it will take some time to rack up enough miles to be confident that you can turn it loose en masse." All right, so that's what James Douma has to say. Dalty Brewer says that Jensen Huang reports humanoid robotics is a $50 trillion industry. Now, that is the highest number I've seen put on it so far. So that would mean $50 trillion a year in revenues coming in to the companies who are making these humanoid robots, either leasing them, selling them, some combination of the above. So that's Jensen Huang's number. I think other people have talked more in terms of 25 trillion, but hey, listen, trillion here, trillion there, whatever it is. The number to give some kind of context to this, I think that Amazon's and Amazon and what's that? Walmart, Amazon and Walmart both are around $600 billion for their entire retail sales. Okay. Walmart, I think, is still number one at something over 600 billion. That's all of their sales total, 100%, not one product, all of their sales, 600 billion. We're talking about 50 trillion. So you're talking about almost 100 times as many sales for one product as you're talking about all of the sales for either Amazon, which I think is just a little bit behind, or Walmart. He says, "I wonder what company will take a large slice of that market." Okay, yeah, I wonder who. Well, listen, this is Randy Kirk. You know all the stuff you need to do, hit like and subscribe and notify and all that jazz. And then, of course, Patreon would be really, really lovely. But speaking of people who enjoy the channel and whatnot, down here in Kauai, I had someone who does appreciate the channel, watches the channel a lot. He says, I had dinner with Steve and his wife down here in Kauai. They live down here and love it a lot, as we do. And anyway, it was a real treat to be able to hang out with another Tesla bull who really appreciates all the things that Elon's doing. Investors are looking for evidence that brand challenges caused by Tesla CEO Elon Musk's policies are fading. Okay, brand challenges are fading. They're still waiting. A weekly update from China could be a sign this week. We might see potential China numbers that are a little better than hoped for, or a little worse than hoped for, and it could have a big impact this week. I agree with that, as I've been saying for about 2 to 3 weeks. I can't remember when I first started talking about this. There is a little bit of a fly in the ointment in terms of this ability to get back to all-time high, and that would be if, in fact, unit sales are really being impacted. If whether it's, I don't care if you call it brand damage, if you're talking about the economies of Europe, not being great, and they really, really aren't great. If you're talking about almost every other car company, especially, their overall sales are not doing well. So Tesla might be a part of that. There could be actual brand damage, especially in Europe. But China, it shouldn't be brand damage. There's definitely bunches of competition, but the Model Y is still getting tremendous amounts of people looking it up on Google, so that should be some indication. Anyway, whatever the case may be, we will find out Monday night, and it could be bad news out of China, which could impact the stock this week. Most recent sales data for the electric vehicle maker just hasn't been good, putting second quarter delivery estimates at risk. Still, there's one caveat. Most of the data is from April, and Musk announced during April, he announced that he would step back from some of his government responsibilities at the end of April. I think this is TSLA reporting right now. I'm not positive, but I think that's who it was. I forgot to write it down. The first 3 months of the year didn't go as planned. Well, that's not true. It went just exactly as planned. They knew that they weren't going to deliver a lot of cars because of the Model Y changeover. Tesla delivered about 337,000 cars in the first quarter, which was down from 13% from a year earlier. At the start of 2025, the first quarter delivery estimate was about 455, but that was Wall Street. What do they know? They didn't take into consideration the Model Y changeover. This miss had even CFO Wabhav Tanaka citing brand damage challenges on his company's first quarter earnings conference call. I think, again, mostly we're talking about Europe, but maybe obviously a little bit in the US, but you've heard me talk about it so many times. Those challenges might have been part of the reason Musk promised on the conference call to spend more time at Tesla than in Washington, D.C. Coming into Monday trading, Tesla's stock was up 47% since the earnings report. An outside observer might assume some sales pickup has contributed to gains. They would be wrong. April sales in key European markets, including France, Germany, and the UK, fell about 49% from a year ago, and after dropping about 45% in the first quarter. Tesla April U.S. sales dropped about 13% after falling 9% in the first quarter, with California sales dropping about the same amount, about 15%. April losses accelerated while things were supposed to be getting better with a new version of Model Y shipping. The model refresh pickup has been slower. The model refresh has been slower than expected. Why do they put pickup in that line? That then throws you into confusion about another product. Tesla forecaster, who goes by the name Troy Teslike on X and is widely followed by Wall Street, projects U.S. Model Y production of about 84,000 in the second quarter, which would be up 17% from the first quarter, but down 12% from a year ago. In China, the second quarter started very weakly, likely because of U.S.-China trade tensions. Yeah, maybe. I suggested as much, and it could be. Tesla sales in the first 6 weeks of the second quarter, based on registration data followed by Wall Street, fell about 26% from a year ago. Chinese sales were roughly flat in the first quarter. Investors can look for 13,000 Chinese deliveries from last week when the number becomes available. This would be a good number. It'd be nice if it was even higher, 18,000, 17,000. That would be close to flat from a year ago and a sign that things are normalizing. below 13,000, and Wall Street might consider that the second quarter estimates are not doing that well. Currently, Wall Street expects about 412,000 cars delivered, which would be up 20% from the first quarter, but down 7% from last year. What the impact of falling delivery estimates on the stock is hard to say. They haven't impacted the stock lately. The stock market, of course, is forward-looking. Right now, investors are excited about self-driving taxis and robots. Tesla's planning to And they're also excited about the Model Q, or the more affordable vehicle, or however you want to call it, which is also supposed to be coming during June, or maybe even sooner. Coming into Monday trading, Tesla stock was down 13% year to date. That is 12 percentage points behind the S&P 500, but that's kind of cherry picking, isn't it? And that Tesla is up over 50 points in the dollars in the past 30 days, almost 30% since the beginning of May, and almost double in the past 12 months. So it just kind of depends on what period you're talking about. Why did they choose that particular period? AJ says, when the U.S. received its first ever ratings downgrade in August 2011, markets, the S&P 500 index, dropped 6.7%, but completely recovered all the losses within 6 trading sessions. So we'll talk about this in a minute. The market is down a little bit right now, but not 6.7%, that's for sure. And we'll see. We'll talk about what might be happening with that overnight and into tomorrow. Scott Bessent spoke about the Moody's downgrade. He says that the Moody's downgrade is looking in the rearview mirror. It's old news. It is stale news. And it is in a response to the Biden economy and the way Biden was running things. To the extent that Biden was running anything, revenues are already up, spending is already down, and the deficit is being cut. And so all of those things, and by the way, Moody's did make mention of the fact that things, like the tariffs and whatnot, could have an impact. Donald Trump actually posted on X today. So he, of course, goes under the name Real Donald Trump. Republicans must unite behind the one big, beautiful bill. Not only does it cut taxes for all Americans, but it will kick millions of illegal aliens off of Medicaid to protect it for those who are the ones in real need. The country will suffer greatly without this legislation, with their taxes going up 65% because of the end of the old tax regime. It will be blamed on Democrats, but that doesn't help our voters. We don't need grandstanders in the Republican Party. Stop talking and get it done. It is time to fix the mess that Biden and the Democrats gave us. Thank you for your attention to this matter. I am guessing that they're trying to pass a bill tonight, Sunday night, into Monday morning. They really want to get it back over to the Senate. To get it to the House floor so they can get it completely passed by Memorial Day, so that then the Senate has a month to work on it before the 4th of July, which is their goal, is to get it done by the 4th of July. Right now, I'm a big fan of the idea that we would cut more, cut as much as you possibly can. A bunch of the hawks are holding out for more cuts. That would be okay with me. And then maybe in the resolution between House and Senate, maybe they can cut it even more. So let's keep on going with the cuts. And I believe that Moody's might have partially come out at this time with this cut in order to encourage the Republicans to cut. I really think that's part of what, well, they said as much in their statement. They went along with the cut. All right, what's happening this week in terms of economic reporting? Actually, not a lot. So the market could be a little bit kind of flattish during this week with not much going on. Now, Trump, of course, makes sure that there's lots of things going on. And I'm thinking that there will be quite a lot of news this week on the Tesla front, too, as we get closer and closer to June 1, as there has been over the last couple of days. And I've been reporting on all of that. So what do we have on Monday? We got a couple of Fed Vice Chair and New York Fed President John Williams, and lots of Fed speak this week. We have at 10 o'clock tomorrow morning, we have the U.S. leading economic indicators, which nobody pays any attention to, as I've said, every month for months and months and months. But we'll be taking a look at that. The leading indicators last month was down 0.7%. And the economists who were polled said they think it'll be down 0.9% this month. We'll see what happens on that one. The devil will be in the details on that, as it is on so many things. I don't think the market will respond negatively. I don't unless it's a real big beat. Even then, they just aren't paying attention to that data right now. On Tuesday, all we have is Fed President Tom Barkin, Fed President Susan Collins, Fed President Alberto Muslim, Fed Reserve Governor Adriana Kruger, all speaking on Tuesday. You know what that could mean. It could turn out to be a really, really bad day. And guess what? On Wednesday, Richmond Fed President Tom Barkin and Michelle Bowman will take part in a Fed Listens event. More. So that's it. So what I'm telling you is Monday, Tuesday, Wednesday, you've got one thing, and that's the leading economic indicators, which nobody cares about. Finally, on Thursday, there will be some reports that people will be listening and paying careful attention to. But initial jobless claims, which were 229 last month and 227 month and 223 and 220 and 227 and 217. I mean, it's been around, what would you call it, 210 to 240 for 2 years. Initial jobless claims expected to come in at 230,000. If that's true, then it will have no impact. S&P Flash U.S. Services PMI 50.8 last month. They're expecting it to be 50.8 this month. No change. I think that would be considered good news. S&P Flash U.S. Manufacturers PMI was 50.2 last month, thinking it'll come down to 49.8. Now, maybe that would be because of some parts shortages that aren't coming in because of tariffs, which would cause manufacturing to slow down a little bit. But I don't know. We'll see. Remember, these are surveys. You always got to think about these PMIs as surveys. They're not hard numbers. It's, what do you think, Mr. Purchasing Agent? What do you think is going to happen? Oh, what do you think's happening now? Do you think your prices are going up or going down? Oh, I see. It's totally a survey. They're not hard numbers. Then on Thursday, you've got another Fed President, John Williams, speak. And then on Friday, we get to, that's it. Oh, I'm sorry, existing home sales. I missed that. Oh, I missed a couple of things. No, just that. Existing home sales, which were 4.02 last month, which is a really low number. They think it's going to pop back up to 4.12. We are in season, the April being the first real full month of season, and that's what they're reporting is April. Then on Friday, more Kansas City Fed President Jeff Smith, Federal Reserve Governor Lisa Cook speaks, and we get new home sales on Friday as well. And last month it was 724,000, and they're thinking they'll drop down to 700,000 on new home sales. That's possible, but I'm not sure. I'm not sure how that's going to turn out. Then on Sunday, which is, after the end of the week, but they're reporting it here, Federal Reserve Chairman Powell he'll be speaking at a commencement. It doesn't tell you which college, so that's interesting. All right, what about earnings reports this coming week? You've got Home Depot and Lowe's, and then you also have Target. So all three of them will give us some indications of how the consumers are doing, how they're spending. Very different consumer analysis here. Target, of course, being the low end of the market. Staples, lots and lots of staples, things people have to have. So it'll be interesting to see what they have to say about how the consumer is acting right now and how tariffs are impacting them. And then Home Depot and Lowe's, of course, being in the, how much are people spending on their homes right now? We'll be talking about, expectations for spring and summer when people spend the most in terms of redecorating. So how will all that pan out? Be interesting to see where those two come. All right. So how are the markets doing? So let's start with Tesla. Tesla is down as it was on Friday, almost exactly as it was on Friday, $9.18, sitting at 340.80. It has been up a little better than that earlier and has now slid down again. But that's where we are right now on Tesla. My feeling is that through Monday, we may come in at 340, something like that tomorrow morning. I think it'll be heading up all day, but whether it gets back in the green or not, unless there's some news, there's nothing really to make it move all the way back into the green. All right, as you can well imagine, it is down because why? Well, because bonds up 3 basis points, exactly the same amount as it went up on Friday night after the announcement. So it's sitting right where it was, 4469. Horrible number. It's got to be too high, got to come down. The oil prices are basically flat, 62.52, up 3 cents. Natural gas down another 2.25% to $3.26. That's kind of in the low range. That's kind of interesting. Maybe expectations of a mild summer, not sure. Okay, gold, we've got up $62. That's pretty significant. All of a sudden, there have been a lot of glitches today on this chart that I use to look at this stuff. Let me go back here and see if I can find it. Yeah, so 32.48, gold picking back up again. I'm sorry, I can't report everything right now because it's glitching. Copper is up 0.13% to $4.60. That's really in the middle of the range. And silver up 1% at 32.70. Dollar did okay last week. It looks mixed here in the pre-market. Bitcoin up 2,788 to 106,000. So you're looking at a recent high as it goes back, and we'll probably take a shot at it. Pretty obviously now that it will take a shot at that 111. We'll see. We'll see how that works out. All right, equities. Here we go. All three are down. We've got the Dow down 0.57, 245. You've got the S&P, which just glitched. You got the NASDAQ down 0.80, or 173 down. And you've got the S&P, which is the one I pay the most attention to, down 0.67%. So down 0.67, that would get us closer to a 4% gain needed to get back to all-time high. So we'll see how that, again, I think the same thing's going to happen with the equities tomorrow. I think, and even the bonds. I think the bonds will back off from that number that we just reported. I think the equities will move up during the day, but I don't think they're going to erase what appears to be the Moody's negativity, but it might erase it by the end of Tuesday, as long as there's no crazy stuff out there. Now, given that Trump is making all kinds of deals and all the other kind of stuff that's going on, there could be some crazy stuff. So, as mentioned earlier, I will put up that video that I did earlier, where basically I took 2 articles, one from Forbes and one from Business Insider, who were talking about how the rollout's going to happen with regard to the Robotaxi, in particular as to whether there's going to be remote drivers or not. And a couple of actually balanced and interesting and useful articles. And then James Douma had a bunch to say on Farzad's show yesterday, and that some of that news was very startling to me. So if you didn't already see that, I'll put the card right up here. Other than that, please do all the things you're supposed to do. Tomorrow, later tonight, almost forgot to mention, later tonight, Cern Basher. We've taken the 3 parts of the bio, part 1, part 2, part 3. And we spliced them all together, turned it into one video for those of you who'd like to go exercise or go walk around, whatever it is you do, take a long drive, looking for something to put you to sleep for your afternoon nap. No, that'll never happen. Not with Cern Basher. Are you kidding? He's got pictures. He's got charts. He's got graphs, even for his bio. So if you haven't already seen it, I'll put the card up. There's no card. Look for that at 7:45 tonight. You've already got the card up here. That's going to be for the video I did earlier with James Douma and those other 2 articles. That's it. I think I'm done. It has been great talking to you.